everyone. Thanks for joining us today. I'm super excited you can be here. Look, today we're talking about really what you get wrong as a founder when it comes to finance, what you get wrong when it comes to fundability and to scaling a business, and how you can get all those things in alignment and done the right way to be able to really not have to work as hard and just have a business that makes you more money. I think so many entrepreneurs get wrapped up in the revenue, the top line that their business is generating, and they're not really building a healthy financially healthy business that's paying them, right? And that's what we really want, is something that has profits, that can get you distributions, that can get you the money out without the stress. So how do we get there? Well, that's exactly what we're going to be diving into today. So with us is Wassia Kamon. Now, Wassia is actually a CPA. She's a CMA. She's an MBA who also brings over 15 years of experience in finance. She's got experience in accounting and business leadership across like a lot of different industries. She actually currently serves as CFO of a mission-driven CDFI, where she helps guide financial strategy, she helps in growth, and she also helps impact for underserved communities. So she's an award-winning CFO. She's a published thought leader, and she's also the host of the Diary of a CFO. You have to check out this show. It's phenomenal. And she's also known for her honest and practical insights into like what it really takes to build and lead a strong financial function. She actually speaks openly about the challenges finance leaders face. She talks about from navigating the first year in the CFO seat to actually building teams that can support growth as well. And Wassia has actually built a strong presence on LinkedIn, where she also shares clear and relatable insights to help founders and finance leaders better understand the numbers and like avoid common mistakes and make smarter decisions. So if you're not following on LinkedIn, you need to after this as well. And her work also highlights how strong financial leadership is a key driver of fundability, of long-term growth, and access to capital as well. So Wassia, thanks for joining us today. I'm excited you could be here.
Thank you so much. And thank you so much for the intro. I was like, who's that girl?
You've done a lot of cool things. What got you into this space initially?
So I always love numbers. And initially I wanted to be a statistician. And then I took my statistic course in college and I was like, no, we're not going to do that. And so accounting was really what was next, because I wasn't going to do anything around blood. So business school, and I just fell in love with accounting with my first course. And that's how it all started.
So we think, in the history you've been doing this, you've been doing this a long time. We're going on a couple decades here. So what do you think founders, like what is the biggest mistake that you're seeing that founders are making, especially like in the early stages of launching a business?
So, couple things here. So, whenever a business starts, when we think about accounting and finance, we often think about how can I minimize my tax liability, right? And so they may connect with their CPA, and it could be a tax specialist, and all they're focused on is how can we minimize your taxes? Well, that doesn't necessarily give you financial statements you need to go and apply for a loan when you're ready to scale. And so at that point, you may not have realized that you had to kind of take a step back from just minimizing my tax liability to how do I build a business so that funders like a bank will lend me money so I can grow, or investor will buy me. So that's often where I see the disconnect between, okay, I want to grow my business, but I'm just going to worry about minimizing taxes for now. I'm just going to need a bookkeeper to help me with this and that, but not necessarily thinking the long-term game, because that's when you will really set up calls or meetings with somebody that can really help you see what is the long-term plan, what is your vision, what is your exit plan, so we can make sure you are structured the right way from day one.
So when should an entrepreneur be thinking about that? Like when I think about somebody that launches a business initially, they've got a lot of time. They have as much time as they do, and they don't have a lot of money. So they're conserving, the funds. So when is the right time to bring somebody in and start helping them with like the books? And then who's the first person they're really looking to bring in at that point?
So whenever you're starting, depending on the number of transactions you have and how complex it is. So sometimes you may start and you're like, as soon as you start, you're like, if you were a grocery store, or if you were maybe in the service industry, for example, you were a coach. Right. So when you're a coach, let's say you have a few customers, you are able to send invoices and do things yourself. It gets to a point when you start feeling like you're falling behind on collecting payment. Usually that's when you want to bring somebody in, because the minute as a founder you spend more time thinking about the nuts and bolts of billing people, you're probably spending your time too much on that and you need to bring in the help. So you always get to that when you feel that tension coming where yes, I'm working hard, I'm not seeing the money. That is usually the tension where you want to bring in someone. And for different people, it may look differently in terms of dollar amount, but it's usually that tension where I'm not get collecting the money I should be collecting for the kind of work I'm doing. At that point, you need to bring in someone. There's a lot of free resources. So at ACE, we are SBA lender. You can look up SCORE. They have free mentorship for businesses. Whenever we assign them a business advisor to help them as well, whether it's to get loan ready or once they have a loan, so they understand and can ask someone those kind of questions.
That makes a lot of sense. When you find that, you deal with accounts, what I love is that like you're the teacher, you're like the whisperer of accountants, like you're the one that teaches them how to do it. So when you're dealing on the accounting side, why do you see that the companies that you're coming in to help them, where are they failing? And like, what of those lessons can be learned from somebody that's choosing the right accountant and from those companies out there that might be getting into or already in financial services in the accounting side now?
So on the accounting side, what I see is at the beginning, you need somebody that's more like a generalist, like a bookkeeper. They can do multiple things, keep the business afloat, pay your bill, pay this, help you stay on top of things. And then you get to a point where you realize I don't just need a bookkeeper to keep me on track. I need somebody that can help me with financial strategy because I have a certain exit plan. So whenever I'm speaking with founders, I'm like, okay, what is your exit plan? Even if it's 10, 15, 20 years from now. And by exit plan, I mean, are you looking to pass down the business to your child? Are you trying to get to be bought out by somebody else? And because that will determine how you want your business to be structured financially. So if, for example, you're like, yeah, I want somebody to buy me 5 years from now. Okay, fine. Let's see how intermingled your accounting is from a personal finances. Because now the focus will be how can we build your business so it's a true standalone entity that can run without you. So it's not just the operation side, but also how your accounting will be set up, the workflow that will happen so that whether you're in or not, your business is still successful. If you were to say that my goal is to pass it down to my children, now we're going to spend more time on talent development. What are the skills that maybe your children may not have that you may need from somebody else? And how are you going to structure that debt to equity ratio as well? So it really depends on what the long-term strategy is. But I think sometimes we just get in, right? And we don't always take time to take a step back and really think through, okay, what will be my long game here and how do I need to strategize to get there sustainably and effectively?
Yeah, I mean, I think a lot of people jump in and hope what they're going to do is going to work, and they start blowing up numbers in their head of how fast they're going to make money and how much it is. And then sometimes those things just don't work, and sometimes they do, and then they get into it, and then they're just far behind on the strategy stuff.
Yes.
So when do you think is the, like, how do they tackle that? Like when a founder comes in and they come in, they find something and starts working and building momentum, like how do they tackle that next phase of getting the right people in there to be able to help them? And what should they be talking to those people about to develop strategies where the company is financially healthy?
Yes, that's when you actually need to work with a fractional CFO. So most companies are not necessarily ready to hire a full-time CFO because that is a big burden on your financials, but definitely having a fractional CFO. And what it could look like is maybe spend the initial first maybe 3 to 6 hours going down through what I was talking about. What is your long-term game? How do you want the company to operate? Do you have a number in mind? And let's then work backward and see, okay, this is where your company needs to be. And then from there, every quarter or every month, depending on how active you are, you can connect with that person. So that will not be your bookkeeper that's just keeping track, but somebody that can sit here and say, okay, this is where I understand your vision. And this is how you'll be able to get there sustainably from a financial standpoint. Because sometimes you don't want to give too much equity to somebody if you wanted to bring in partners. What is the right amount of debt? When should you get those things? How should you structure the business from a compliance standpoint, from internal controls? Because a lot of people, the number one reason a lot of businesses fail is around accounting and finances. And sometimes we think, okay, I hire this person, I trust them, but it's only one person, and that is a big concentration risk. If all your accounting, all your finance revolves around one person, you have what I call key concentration risk. You are more vulnerable to fraud from this person. Like, we don't like talking about those things that way, but it is a reality.
Yeah, it's a true thing. Unfortunately, like when I look at the times I've been burned in business, it's been an inside person has been the majority of the time, unfortunately. Like those to your point, like that's what you got to look out for the most. You mentioned this and you mentioned getting loans a little bit
Yes.
ago as well. So like when do you see how does from your experience, how does the poor financial situation affect somebody's ability to get financing? Like if they're not doing these things with strategy and getting the structure right in the beginning, how have you seen your experience that it is creating a barrier or even preventing them from getting the financing they need to grow?
Yes. So at ACE, we're a small business lender. And so we have hundreds of people applying for loans. And so we have a underwriting team that goes through, check the financials, ask for the documents. And so often we realize a lot of people are not loan ready. So we actually have workshop to help people understand the kind of financial statements that we as a financial institution are looking for before they apply. And sometimes because they have tax returns, but they don't have like financial statement with your income statement, your balance sheet, your cash flow, for example. They don't have strong financial projections that make sense. So even though I can put a number and I can say, oh, I'm going to grow, let's say $100,000 a year for the next 3 years. The person receiving your statement will say, okay, based on that, I don't see how your costs are increasing. They'll start poking holes into your financial projection. Are you able to answer? And say, yes, this is how it's going to be handled. This is how we're going to be able to fund this. This is how this loan will help us in the operations. This is how we'll be able to grow from there. So being able to articulate what that loan will do for you and making sure you don't have already too much of a burden on your statement. Because if your margin are slim and you're asking for a loan, as a lender, I'd be like, I'm not sure you're the right person because if something goes up, you don't have enough buffer to repay the loan. Because you have to think about it from both sides. As a lender, will I want you to borrow from me and will you be able to repay?
Yeah, that makes a lot of sense. And you talked about ACE. What is your relationship with ACE and what is ACE funding?
Yes. So ACE stands for Access to Capital for Entrepreneurs. I'm the sitting CFO at ACE, and we are a CDFI base here in Georgia. So we only service the state of Georgia. We have a full network of, it's called Opportunity Finance Network, of other financial institutions that can help with affordable housing development, different type of loans throughout the states. We are in between a bank and a not-for-profit. And what really makes us stand out is because we provide financial education, literacy. When somebody gets a loan, they also get assigned a business advisor with them. And so that's a neat niche, I will say, because we often give loans to people bank will refuse to give loans to, because we look at a client more holistically and we give people a chance. So I always encourage people, because a lot of people don't know what a CDFI is. I'm like, look it up, please. There's a bunch throughout the United States that provides assistance to people, especially when you're being turned down by banks.
Yeah, I love that because you're offering all the in between help that they need to actually be able to be successful.
Yes.
Yeah,
That's
and
what
then
that's why I enjoy working here. It's pretty neat because a traditional bank will give you a loan and that's it. But you don't necessarily get set up with one-on-one calls with a business advisor that genuinely wants you to succeed. Because hey, you succeed, we get paid, so it's like a win-win.
Yeah, I love that. Yeah, CDFIs are like so valuable around the country because of all the services you offer. So, and I love, and by the way, thank you so much. I appreciate what you do because you work so hard to get somebody funding where somebody else is just auto declining and not even spending the time with them that they need. Where can we find ACE online? What's the site there?
aceloans.org.
aceloans.org. Okay, perfect. I want to put that on the show resources page too, so anybody in
Thank
Georgia
you.
is able to find you over there. So I appreciate that. So that being said, what do you find in you're on the lending side too?
Mhm.
So what do you find then, like from a lending's perspective? Because you have this really unique insight. Like you're a CFO, not just a CFO, but you teach the CFOs how to be CFOs. I mean, that's
Mhm.
like you're the CFO whisperer. And then on the other end, you're on the lending side, and you get it. So what do you find like? What is it that lenders are really looking for in an applicant and a borrower that borrowers just don't typically realize the lenders are really looking at and looking for?
We always looking for someone who understands their numbers because we'll be asking questions, and usually the people who stand out are those who are able to articulate their numbers. What is their long-term vision? If I ask you what's the number one, like what is your number one expense, you should be able to tell me what's your number one expense is, for example. And so sometimes, and it really depends also on the level of loans you have. So if you were just asking for a micro loan, so 15,000 to 50,000, typically in that SBA range, the process for application is pretty quick. We look at your credit score, 600 and up. How long have you been in business? Usually 2 years in business, healthy bottom lines, healthy outlook. What is your business plan? Tax returns, all that stuff. Okay, diligent. When you move into the 6 digit kind of loans that you're trying to get, that's usually where the underwriting process takes longer because we may need something that's a bit of a collateral behind it because your microloans typically do not have micro collateral, especially if you do them through the SBA. But then the higher you go, the more stringent the process is, and the more you have to be in tune with your numbers. And that's why we always advise whether it's having sessions with your fractional CFO to help you through your projection or your bookkeeper to make sure everything is in order. You want to be on top of your numbers. You have to understand where you bleed cash, where you save cash, how are you optimized for growth, because that's what we're trying to understand. Because we're giving you an influx of cash, what are you going to do with it? So if you're not able to truly understand and articulate how you're already using the resources you have, we'll be skeptical about giving you more money.
Yeah, that makes sense. If somebody's in the beginning stages of this, like what should they be doing to improve their funding readiness or fundability? Like right in the beginning, what should they be thinking about and focusing on before they even think about applying for funding?
One, open a business account. Stop using your personal banking account to do things. You want your business to really feel like it's a standalone. Even if you have in the beginning to fund that business account with your own funds, fine, but try to separate your personal expenses from your business expenses as much as you can. If you took a credit card for the business, but you were not able to take a business credit card, just use business expenses on a separate credit card, for example. So try to keep those two as separate as possible. Definitely look into like a QuickBooks Online for entrepreneurs. Very easy to document your expenses so your business can have the beginning stages of its own financial statement. So I have my own business, so I have my QuickBooks Online so I can snap my receipts, make sure that everything is clean, because you want to have that discipline already having numbers so that whether you go and hire a bookkeeper a year or two from now, you want to start where you are. Every dime you're spending on that business, you want to be able to track it from day one, because then when you turn around and you have somebody else and there's handling your finances, you understand it. There is fewer chances of you not understanding what the other person does, and you are able to better be in tune with that even if you don't have an accounting and finance background. So I will say from day one, try to keep your business finances separate from your personal finances. Be very careful with the amount of debt you take. So whether it's a credit card or all these things, because your first loan typically will be based on you as a person because the business doesn't have a history yet. So what is your credit score? How much debt, personal debt, do you already have? Maybe you want a new car. Okay, maybe wait a little bit. Don't go for it. So you want to make sure that your personal debt, yeah, the amount of debt you have on your personal side, it's also as minimum as possible. Because again, your business will not have enough history, and we'll be looking at you for that first loan. So definitely keep your business finances separate and also try to trim your personal debt as much as you can before you go into it.
Oh, phenomenal advice. Love all that.
Thank
When
you.
you're talking about credit and on the consumer side debt, do you when with what you do at ACE, do you take into account business credit? Is that something you review before making lending decisions?
Yes, when it's available. Because a lot of people come in, and if you are going, so let's say, let's pick a food truck, for example. So if you were to start a food truck, as soon as your business start, you already need debt, right? Because you need to purchase that. You need to purchase the equipment you need for your food truck. So at that point, like from day one, those businesses or a concession stand, like you start from the get-go with probably needed some kind of debt if you didn't have personal fund to fund the food truck, for example. And so you may not have a history per se of business credit. If you have, definitely helpful. But again, it comes down to how much you're asking for. So again, if it was just a $15,000 to $50,000 loan, okay, you know it's probably again very based on your personal credit. But as you go higher, we'll be looking definitely at your business credit.
Okay, good to know.
Mhm.
When you're looking at business credit, how much of an impact does that have? Like, what's the difference between somebody that has really good established business credit and somebody that has none when you're going through that qualification process?
Your cash flow. How much cash flow is a business generating? At the end of the day, the lender is really looking into your cash flows. How long are you in a deficit? And when you're in a deficit, how long do you stay in a deficit? When we look at your past 12 months, like what is the fluctuation in cash flow? Are you red most of the year and then you become green once every blue moon? Or are you consistently green? Are you consistently, like, is your bottom line consistently in the black, right? And not in the red. So cash flow is really what determines, even if you don't have that strong history, like how much cash flow will you be able to generate? And are you being able to generate from the business?
Okay, that's great. And we talk about cash flow. Let's talk about the financials. Like if somebody's looking to clean up their situation quickly, like if they know they want to apply for a loan, what are some of the first things they should be doing to clean up their financials quickly before they're going out there and getting trying to get funding?
So get with a bookkeeper. If you already have a bookkeeper, it means your finances were pretty much, your revenues, your expenses have been recorded as they should throughout the year. If they were not, that would be the first thing that the first thing where you want to start. Making sure you have clean financial statement. You can't just have you recorded everything in January, then you didn't do much in March, and then you start again in April. You want to make sure that you go retrospectively and make sure all your statements, your bank statement were reconciled, everything was on point from that standpoint. And now you want to look at your expenses and see where do you need to optimize your gross margin, especially if you are in the business of selling physical product. What is your EBITDA? Like, how do you make money from the business? So go through and see which expenses are a need or just a want. So, for example, we all have a lot of subscriptions. Subscriptions and consultants. There's always a lot because you subscribe. It's a $10 here, it's $100 here, and before you know it, it's a line that blows up on your financial statement. Take time to go through and see if what you currently have still makes sense. I do the same personally, right? I watch Netflix. Maybe I don't need Hulu. Like, just the same thing you will do in your personal life, definitely do the same where you need to trim things so that the bank can see, or the lender can see, as for the past 3 months, this is how your bottom line has been improving. So by the time you go, you can already show improvements in your bottom line and how this particular loan or additional use of capital will help you go to the next level.
Yeah, I love that. And I love that way of thinking as well, because I mean, that's really what it's about. And somebody wants to get the money they can get now, and they also want to continue to grow to be able to open up doors to get more and more funding. As they're growing, and you've talked about CFO, we've talked about bookkeeping. What is the team you should be building in the order that you should be building it? Like when you're starting a business, who's the first person you think about bringing in? Like what are the financial positions you should be filling, and what kind of is an indicator that it's time to get that person?
Oh, great question. I wish more people would ask it at the beginning. So you always want to start with a bookkeeper, okay? Doesn't have to be a direct hire. There is a lot of bookkeeping firms. You need someone that will make sure that every single dime that is received and spent in your business is accounted for every month. So yes, you probably have a tax person, but you need a bookkeeper to start with because a bookkeeper is just a generalist, right? We're just making sure that, hey, everything is in because that way you can actually have true revenue minus expenses equal what you made at the end of the month and go that way. Then you get to the point where your business, especially as an entrepreneur, when you get to this is your livelihood, like you quit a job or you went all in on a venture and this particular thing needs to work. As soon as you feel that tension, connect with a fractional CFO because a fractional CFO will help you build that accounting and finance function you need. You'll be able to say, okay, now we are going full in. You're not just, trying something here. You are fully in on this particular venture you're going after. It's not just a side project. This is what you're doing for a living now. You need to talk to a fractional CFO, even if it's a 1 hour consultation, a 2 hour consultation, whatever it is, so that you can start feeling, okay, now I need to understand how my money will be handled. And that's when the fractional CFO can help you. We say, I want to hire a staff accountant that'll be here to make sure that things are reconciled, that the person that pays the bill is not the person that also can erase record in the system. So you have balance of internal control and that segregation of duties so that you don't have one person that can do it all and avoid that concentration risk. Because again, concentration risk is usually where a lot of companies fail, even large companies, companies that you see filing for bankruptcy at some point, you're like, what happened? Well, at some point, they relied on this one person to do it all. That's when you're vulnerable to fraud. That's when and the more money is involved, the more you need people, different people to know what's going on. And you need a qualified person to view the work that is being done. So even if that person is not necessarily a full-time hire, other people need to know that they're being watched. It's almost like having that surveillance camera at the cafeteria. The minute somebody sees it, they're like, oh, maybe I won't steal lunches today because there is a camera watching me. It's the same principle when it comes to finance and accounting.
Okay, I love that. So, what's the best advice you have that maybe I haven't already asked? Online, I've already asked. Just for somebody that some of the best advice that you give somebody, like if you had to give somebody one or two or three of the best tips you have, what would the tip or tips be on something we haven't discussed?
The community and network of people you have around you. So I call it the personal board of director. In your personal board of director, because large companies do it, but we often don't do it on the personal side. On my personal board of director, I have a friend that's a lawyer. I have a CPA friend. I have a CFO friend. I have a speaking friend. Like, how many people are in your network that you can easily call, regularly call, and say, I have no clue what I'm doing. Can you help me with this? So people that are invested in you and invested in them, but having that network that allows you to think beyond your day to day. Because when you're into something, you all in, and you may not realize, okay, what are the new best practices? Oh, maybe I didn't consider it doing that way. So you can start operating as a corporation will do, even though you have a technically small business, because that's really what makes the difference between the businesses that really scale and those who stay at the same level for decades.
I love that. That's powerful. So many good things you do. LinkedIn and so many other channels. Everybody watching, if they want to follow along and they're in the financial service industry and they want to be able to have you be the whisperer and learn from you there, and they're just running a general business and they want to learn more about being able to get funding from ACE or all the things you do there, or what they need to know about the financials to improve their overall situation, where should they go to be able to get more information and learn more?
WassiaKamon.com, and follow me on LinkedIn, send me a DM. People often say, "Oh, you have 30,000 followers." I'm like, "Yeah, but I still read my DM." So always happy to talk, always happy to help.
All right. I love it. Thank you so much for coming on with us today.
Oh, of course. Thank you so much for having me.
All right. So listen, what you're watching this, you got to have this. You got to have this done the right way. I mean, here's the reality: a lot of people kill themselves building a business that generates revenue and it doesn't earn profits. And the problem is that as higher the revenue gets, the more the stress there is, because you don't have the margins to be able to give you some peace of mind, and also to be able to have that money that you're able to take out of the business to be able to really support your family, which is why you got in business to begin with. So if you are in that situation now, or you want to avoid being in that situation, then what you should do is you should follow Wassia. You should go to her website, which is WASSIA Kamon, which is KAMON.com. And if you go there, just take less than a minute, go to the bottom right of the page and just follow her on her social media channels so you can be able to access LinkedIn and the other great places that she's delivering content. You'll see there as well that she's got her podcast you can access. She's got guides there. She's got a lot of free resources. You can even invite her to actually be a speaker, or you can get in touch with her to see what her and her company can do to be able to help you. So make sure you check it out. It's WASSIA.com. Make sure you check it out today. Don't forget to subscribe on our social media channels while you're there. Thanks for tuning in. Take care. Have a great day.